Hi guys, hope you're well. Just going to do a breakdown now and I'm going to jump straight into it with GU. So what has happened last week? So the US dollar has weakened recently due to the escalating US-China tariff war, which has now sparked fears of global trade disruptions which reduce demand for the dollar as a safe haven. The US Treasuries have also been selling off rapidly, which has then resulted in the yield price rising. Now, usually when the yields rise, USD also rises, so this situation has ultimately diminished the strong correlation between the two assets. Additionally, we've had some soft inflation data come from the US at 2.4%, which has also added some fuel to the fire, with more rate cuts now being priced in. So as it stands, the US is essentially uninvestable and liquidity has just been getting sucked out of the economy and is being put into safer assets such as gold, which has hit another all-time high this week. And in terms of my plays for last week, the only zones which we had come close was firstly this zone here at 132 and then the next one at 133. Now the first zone I had just here, it actually did trigger, it did hit 132 and it did roundabout, as you can see. Yeah, it hit the 132 here and did round about 75 pips. Now for me, I didn't actually go for it. Reason being was the timing was shit. Also, I needed alignment to go for it, which we didn't get. So for that reason, the trade wasn't valid, but that's fine. And the next zone we had was 133 and it actually didn't hit. I did have the pending set for it, but it came round about 5 pips off before then doing another 80 plus pips. And for the week ahead, I'm going to delete these zones here because they're no longer valid. But this sell zone here, this first one, is still valid. We do have the 134 around about 20 pips below the level. Yeah, 20-ish. But realistically, if I were to incorporate that, then I'd have... the zone would be around about 40 pips. And to be honest, I'm more than happy to just risk missing the trade. But if I do get into it, then I'll have a much better risk to reward. So if you are going to enter this trade at 134, you're not wrong for doing so, but you will have to cover this high and a little bit extra. So if you're going to go for that first level, I can probably consider splitting your entry so that your first one is at 134 and then the next one is just at the high. But I'm more than happy to just miss the 134 and go for this wick just there. And above that, so I can see the 135, which is a good psychological level just above it. So I'll draw up the zone so it matches up with it, yeah. And I'll see if we have anything near it as well. So I'll draw it along and zoom in. So what we do have, we actually have a good break retest here as well. So I'll draw the start of the box up there and then the end of the box will go at the 135, which is round about there. So that's my next sell zone after the high is made. And above that, we also have this level here too. So those are my next two sell levels once we break the highs. And the way that I'd play these zones, so firstly, this zone here, this now needs alignment with it. Or alternatively, if we do get a strong push into it with timing, so as long as we don't have a significant pullback in between where the price is now and when we get to the level, as long as we have good timing with it, I'm willing to take the trade as well. But in the case that we don't have any of that, then I'll anticipate a breach of this and just go for this one instead, the 135-ish level. So the entry will be around 1.3485. Now, if the highs do create the pullback, that now means that if we get to the 135 level, I now need alignment or a strong push into the zone with good timing. And if we don't have that, then I'll anticipate a breach of it, so I won't go for the level, and I'll just go for the one above it anyway, at 136.4. And that's how I play those sells. Now in terms of buys, I don't really have anything above this, apart from, I'd say, the 130 level, so which is around that little wick there. So yeah, the 1.30 level is something that I'm interested in. Now, I can draw a fib up to it, but I think it's pretty pointless because the chances are we'll probably make another high. But as it stands, it does line up with a 50 fib. But again, that's only if we don't make another high from here. So the chances are the fib is going to move, but so I'm not going to adjust my entry to incorporate a fib level because the chances are we're not going to have it anyway. But the way I'd take the buys is the exact same as the sells. So this first one, this does need alignment or a strong push into it with timing. If we don't have that, I'll wait for a breach of it to increase the appeal of this zone here and just take that one instead. And of course, if the 1.3 level does provide the pullback, something like that, then I now need alignment or a strong push into the zone with timing in order to take that. If we don't get that, then I'll need a breach of that in order to take that one instead. And in terms of data releases, so this week we do have PMI from the UK and the US. More often than not, it's not a massive driver with this pair from either country. But it's one of those things where if we do get quite close to the level and PMI pushes up there, it could be a decent reason to go into it. And then we also have the UK retail sales on Friday as well. Now, in terms of alignment, this is what I have on the Dixie. So I'm not going to align any pound pairs because I can see that the main driver is the USD at the moment with everything going on. And as you can see, the chart on the DXY does reflect the uncertainty within the US economy right now, with it trading now below the 100 mark. And the next level of support that I have for the Dixie is in and around this level here at just under the 98 level. So what that means is that if we have GU on any one of our sell levels when the Dixie is in and around this level here, that does mean we have an alignment and it will be a valid sell to take. And on the flip side, if we have GU at one of our buy levels when Dixie is at one of these resistance levels here, then that means it's a valid buy too. That's everything I have on GU. I'm now going to move on to my other pairs now. Now, moving on to the stock market. So I'm actually looking at the NASDAQ a lot more recently just because I've found that it works a lot more better to technicals than the S&P does. And as you can see, the global uncertainty is being reflected in this chart. So we did have a massive pullback of 16% with the 90-day pause on tariffs. Now, obviously, this didn't include China, and we have dropped further since then. So since the high, we've dropped a further 6.5%. And the near future of the stock market really does depend on what happens with tariffs. Now, Trump has raised the tariffs on China to 245%. So we are now in a full-blown trade war. Now, whether China actually retaliates or not, or whether they want to go ahead with a deal with the US, does determine the future of the price of the stock market. Now, if China decides that they don't want to go ahead with any sort of deal and they want to just keep retaliating up their tariffs every few weeks or whatever, then what's likely going to happen is we will just keep trading further down. But if they then decide that they want to start negotiating for a trade deal, then the chances are we're going to start pushing up again. And this is what I'm personally waiting for, because now we've got inflation coming down, which means that rate cuts are now being priced in earlier than before. Now, this is bullish for the stock market. However, the main narrative for the stock market is related to tariffs. So I'm now waiting for the tariff news to break out for us to get some sort of deal between the US and China before I actually start putting money into the stock market again. And that's essentially what I'm waiting for. I'm holding on to my cash at the moment up until we get some sort of deal between China and US, and then I will start buying a lot more aggressively. And one day I will thank Trump for these cheap prices he's given us today. Now, in terms of my zones, I didn't have anything hit last week, so we only traded between this range here, and I didn't have anything within that range. So my buy and sell levels do remain the same. So I've got this sell here, which I'm pretty sure is a 61 as well. Yeah, 61 fib with the EMA and a key level, so that's a good solid setup. And then we have the backups as well. The way I do this, the exact same as it's always been. I need alignments or a strong push into the zone with timing in order to take that. If we don't have that, I'll wait for a breach of it and I'll just go for this level instead. And if that first level that does work, whether or not I take it or not, something like that, then I need alignments or strong push to take this zone. And then if we don't get that, I'll wait for a breach of it to increase the appeal for this last zone here. And for the buy zones, so I do have these two, but we'll have some key levels after that too. So yeah, we do have this level here too. So we've got this level as well, which is a good break retest. So I'll draw that up. As it turns out, it's actually quite close to this wick here. So from this level to the next one is only about 120 pips. And for NASDAQ, I only really go for 100 pip stop loss anyway, so that is really close. So what I might end up doing is I might end up splitting the two entries. So instead of going for a full position here and then a full position at the next one, I'll just split the two. So what it means is that for the first entry anyway, the risk reward on it won't be great, but if we do tap into the next one, then the risk reward for this one will be a lot better. But the way that I'd play it is the exact same as the sells. So this first one does need alignment or strong push into it with timing. And if we don't get that, then that's when this buy scenario here does come into play. And I'm pretty sure I will be splitting those entries. So the positive of splitting entry is your chances of making money, in my opinion, are greater. But the con is the chance of you making less money are also greater. Because there are so many ways of how you can manage this type of trade. And essentially, I'm just playing it the safer way. But that doesn't mean it's the right way, it's just the way that gives me the best peace of mind. But for the first zone, I mean, I won't cover those two anyway because they're about 300 pips apart anyway, so that's big enough for me. Now, in terms of alignment, these are the zones that I have on S&P. So if they match up with any of the NASDAQ buys or the NASDAQ sells, then they will be valid trades, and I will be taking them. And in terms of the stocks, that's all I have for NASDAQ, and I'll move on to my last pair now. Right, and now GJ. So, as you can see, the yen has been on a real roller coaster recently with all the safe haven demand. But the same again, I didn't have any trades on it last week. The zones I have on it are the exact same ones that I had at the start of last week. Now, for these first two sell levels here, we do actually have a 61 fib in between the two levels, which is sitting around here. But for me personally, it's not worth covering it because that is around about 75-ish pips away. Now, the only way that I'd consider splitting is if we had another key level in and around it. We do have a very small level, most likely on the 4 hour, but I'm not interested in that. So because we don't have a good daily level on it, I'm not going to split my entry, and I will likely just go for around about a 50 pip stop loss on this, and then just play it the exact same way that I would. So I'll draw this a little bit closer down to cover the EMA, and a little bit up as well. So the way that I'd play this is the same that I do on my other pairs. So in order for this one to be valid, I need alignment or timing with a strong push into the zone. And if we don't have that, I'll just incorporate a breach of it, so I won't take that first level, and I'll go for this one instead, in the hope that we get some sort of profit taken from it. Now, if this one ends up pulling back, whether we're in the trade or not, this one now needs alignment or a strong push into the move with timing. And the exact same as before, if we don't get either of those things, then I won't take this level, I'll wait for a breach of it, and I'll just go for the highs up here anyway. And for the buys, so this is a similar sort of situation as I got on the NASDAQ. So I have two key levels which are around about 60 pips away from each other. Now, more often than not on GJ, I usually go for around about 50 pip stop loss, but because this is 60 pips away, what I don't want to happen is I go for a 50 pip stop loss on this. We come around about 10 pips off the level. I get stopped out of this first one and I don't get tagged into the next one. So there's two options with this one. I can either go for a 60 pip stop loss on this and make sure that if I do get stopped out of that, I then get tagged into the next level. Or I go even bigger and I just split the entries. And again, splitting the entries, it means that the risk reward, especially on that first entry, is going to be a lot lower. But what it also means is that your capital is a lot more protected. So if you were to go full position here and full position there, you could lose two full positions. Because let's say even if you were to have in total a 100 pip stop loss, GJ can do 100 pips very quickly. So at least if you split one full size position between the two entries, then you'll only lose one position. And then what it also means is that if this one blows through and you get tagged into this one now has a much better risk reward. So it's up to you guys how you play it, but I'll most likely just split them instead, just for my better peace of mind. But that first level is only valid with alignment anyway, so if we don't get alignment on this level or a strong push with timing, then I'll wait for this to breach anyway, and I'll just go for a full size position on the next one. And I'll most likely aim for a TP at the break retest of this first level here. And then if this first one does end up working, whether or not we're in the trade or not, this second one now needs alignment or timing in order to go for it. If we don't get that, then I'll wait for a breach of it and go for this low here. Now, we do have PMI getting released for Japan as well, so that could add some volatility to the markets too, so be wary of that. And now for alignment for GJ, this is the JPY currency index. And this is my favourite asset to align with GJ. Because more often than not now, the main driver on GJ is the yen. Now this never used to be the case because Japan, they always kept their rates very steady without ever intending to move them at all. and the economy on a whole was stable. So the pound was primarily the driver for it. But now, especially with all the safe haven demand recently, along with Japan being a little bit more loose on their monetary policy stance, the yen has been the main driver for GJ. And that's why I primarily look at the yen index for it. I also look at yen pairs, but I'll only class it as alignment if more than one of them is aligning. But even if the JPYX is aligning, then I will take it. So what this means is if GJ is moving down, so the yen is getting stronger, and we get to one of these resistance levels here, then I will class that as alignment, and that buy zone on GJ will be valid. On the exact same for these support zones here on the JPY index, if we have GJ moving up to one of the resistance levels while the JPY index is on one of these support levels, then that will also be alignment as well, and it will also be a valid trade for me. And that is everything I have for GJ. Now hopefully this week is a lot more active than last week, because we didn't get any trades last week and it was a week for just sitting on our hands. So hopefully this week's different, but you never know. I'd rather be safe than sorry.